Hi, and welcome to the 14th episode of Kanga Crypto News, where I'm going to present you with the latest information from the world of crypto, which happened over the course of last week. It was a difficult week for many investors due to substantial declines. Bitcoin fell below $59,000 and altcoins dropped by 30, 40, 50% and in some cases even more. The Fear and Greed Index on Tuesday was at 30 points, indicating extreme fear. Fortunately, the market has rebounded, and so has the Fear and Greed Index. But does this mean that now we can expect only increases? Before we get started, remember that all of the information for Kanga Crypto News are collected by experienced analytics from Kanga and based on reliable sources from the internet and expert knowledge. In today's episode, we will discuss the following topics. When will Mt. Gox payouts be made to affected exchange users? Then, what is the stance of financial advisors on investing in spot Bitcoin ETFs? Afterwards, a couple of words about Julian Assange released from prison. What will happen next? And then, is the SEC investigation into Ethereum truly over? Fidelity boosts its Ethereum ETF portfolio with $4.7 million. And finally, MicroStrategy buys $800 million worth of Bitcoin. Remember to subscribe to the channel and give us a thumbs up. Remember to also click the bell button so that you won't miss out on any news. Let's get started. Defunct Bitcoin exchange Mt. Gox said Monday it will start to distribute assets stolen from clients in a 2014 hack in the first week of July, years after continually moving deadlines. The rehabilitation trustee has been preparing to make repayments in Bitcoin and Bitcoin Cash under the rehabilitation plan, trustee Nobuyuki Kobayashi said in a Monday statement posted on the Mt. Gox website. The repayments will be made from the beginning of July 2024, Kobayashi said, adding that due diligence and certain safety steps will be required before the payments go through. The repayments are largely considered to add selling pressure to Bitcoin markets, as early investors will receive assets at a much higher value than their entries before 2013, making them inclined to sell at least a part of holding, traders said. Mt. Gox was once the world's top crypto exchange, handling over 70% of all Bitcoin transactions in its early years. In early 2014, hackers attacked the exchange, resulting in the loss of an estimated 740,000 Bitcoin, worth $15 billion at current prices. The hack was the biggest of the many attacks on the exchange in the years 2010 to 2013. Trustees have put together a repayment plan that has been in the works for several years and received a deadline of October 2024 from a Tokyo court last year. In May, the exchange moved over 140,000 BTC, worth around $9 billion, from cold wallets to an unknown address in 13 transactions for the first time, marking the first on-chain wallet movements for the first time in 5 years. Can the Mt. Gox payouts cause market declines? There is a significant risk that they might, but the more important question is, how large will those declines be? Opinions are divided on this matter. Write in the comments what you think we can expect. The next news concerns the approach of financial advisors to investing in spot Bitcoin ETFs. BlackRock's chief investment officer for index investments, Samara Cohen, recently implied that amidst the recent success of spot Bitcoin exchange-traded funds, financial advisors still exercise some degree of caution when investing. The volatility and infancy of Bitcoin and related exchange-traded funds are the primary drivers behind this investment class' slow adoption. Since their debut in January 2024, spot Bitcoin ETFs have attracted massive investments from loads of individual and institutional investors, with the investment vehicle recording over $15 billion in inflows. However, according to Samara Cohen, this fast-moving investment vehicle has yet to convince financial investors. Cohen mentioned that according to last quarter's 13F filings, brokerages and hedge funds have been key participants and buyers in spot Bitcoin ETFs. Speaking at Coinbase State of Crypto Summit in New York City, she noted that approximately 80% of Bitcoin ETF purchases are made by self-directed investors using online brokerage accounts. However, registered financial advisors have remained skeptical, with Cohen describing their stance as wary. She believes financial advisors only do their job by expressing skepticism before investing. She stated, "An investment advisor is a fiduciary to their clients. This is an asset class that has had 90% price volatility at times in history, and their job is really to construct portfolios and do the risk analysis and due diligence. They're doing that right now." Owing to the volatile nature of cryptocurrencies, Cohen believes financial advisors must keenly analyze data to check for risks before deciding on appropriate investment exposure based on an investor's risk tolerance. Dhruv Maserati, the head of digital asset strategy for T. Rowe Price, shows that many see 1% as a safe and comfortable exposure. Another speaker, Alessia Haas, the chief financial officer of Coinbase, also noted that Bitcoin is on a slow journey of adoption. Do you know Julian Assange? In the world of crypto, it is an important character. WikiLeaks founder Julian Assange was released from a British prison and was making his way back to his home country, Australia, on Monday after his 12-year battle against extradition to the United States ended in a plea deal. The controversial figure has spent the past 5 years in a high-security prison in southeast London and nearly 7 years before that holed up at an Ecuadorian embassy in the British capital, trying to avoid arrest that could have led to life imprisonment. On Monday, Assange agreed to plead guilty to a felony charge related to his alleged role in one of the largest US government breaches of classified materials after his whistleblowing website published nearly 500,000 secret military documents relating to the US wars in Iraq and Afghanistan. The plea deal caps a long-running legal saga, allowing Assange to avoid prison in the US and return to Australia as a free man, but not until he has made a court appearance in a remote US territory in the Pacific. Assange boarded a flight from London Stansted Airport on Monday after being released on bail from prison, according to a statement from WikiLeaks on Tuesday. Julian Assange is free, WikiLeaks said. He left Belmarsh Maximum Security Prison on the morning of the 24th of June after having spent 1,901 days in there. Traveling with Australia's High Commissioner to the United Kingdom, Stephen Smith, Assange flew to Spain, the largest island and the capital of remote Northern Mariana Island in the Pacific. Under the terms of the agreement, US Justice Department prosecutors sought a 62-month sentence, which is equal to the amount of time Assange served in the United Kingdom while he fought extradition. The plea deal credited the time served, allowing Assange immediately return to Australia. A week ago, the SEC has closed its investigation on Ethereum 2.0, but is the case really all clear and concluded? The Securities and Exchange Commission's move to close its Ethereum 2.0 investigation of Consensus raises the question, so is Ether not a security? Sources say that it's still not entirely clear. Consensus announced on Tuesday that the SEC's Enforcement Division notified the blockchain and Web3 development company that it was closing its investigation into Ethereum 2.0 in a major win, and said it meant that the SEC would not bring charges alleging the sales of Ethereum and securities transactions. This comes after the firm sent a letter in June asking the agency to confirm that the spot Ether exchange-traded funds approvals in May meant it would end its investigation into Ethereum 2.0. In a letter sent June 18th to Consensus from the SEC's Chicago regional office, the agency said it had concluded the investigation in the above-referenced matter. While we did not win with this notice or otherwise agree with the factual statements or legal conclusions set forth in the June 4th letter, based on the information we have as of this date, we do not intend to recommend an enforcement action by the Commission against your client, Consensus Software Incorporated, with respect to this investigation, the SEC said. Consensus previously said the SEC's director of the Division of Enforcement, Gerber Grewal, approved the investigation into Ethereum 2.0 in March 2023 to investigate individuals and entities buying and selling Ether. The question of whether Ether is a security or a commodity has been in the air for a while. The SEC's chair, Gary Gensler, has not explicitly stated that Ether is a security. Meanwhile, at the SEC's sister agency, Commodity Futures Trading Commission, Chair Rustin Barham has asserted that Ether is a commodity. The SEC's move to close its investigation thus tipped the scale into Ether being treated as a commodity, said Teresa Goody Julian, a partner at Baker Hostettler law firm and former litigation counsel for the SEC, in an email. The SEC reportedly closing its investigation into Ether does not mean that this commission is definitely concluding that Ether is not a security, she said. But it does provide another data point, that is, this commission has concluded not to bring an action alleging that Ether is a security at this time. Okay, let's move on to the news on ETFs on Ethereum. Is there a potential in them? And if so, how big is it? Fidelity Investments is set to launch an Ethereum exchange-traded fund, starting with an initial seed investment of $4.7 million. The ETF, named the Fidelity Ethereum ETF, aims to provide direct exposure to Ethereum, the second largest cryptocurrency by market capitalization. This initiative is part of Fidelity's broader strategy to offer more cryptocurrency investment opportunities to institutional and retail investors. The move aligns with the growing institutional interest in digital assets as more traditional financial institutions recognize the potential of blockchain technology and cryptocurrencies. Fidelity's filing with the Securities and Exchange Commission highlights their commitment to expanding their cryptocurrency product suite, which already includes a Bitcoin ETF. Fidelity's entry into the Ethereum ETF market is significant given the company's stature in the financial industry. This development comes amidst a broader trend of increased regulatory scrutiny and interest in cryptocurrency ETFs. The approval of the Fidelity Ethereum ETF could pave the way for other financial giants to follow suit, potentially increasing the mainstream adoption of Ethereum and other digital assets. The Fidelity Ethereum ETF will enable investors to gain exposure to Ethereum without needing to directly purchase or store the cryptocurrency, thus mitigating some of the risks associated with direct crypto investments. This product is designed to appeal to investors looking for a regulated and secure way to invest in Ethereum, leveraging Fidelity's extensive experience and reputation in the investment world. Overall, the introduction of the Fidelity Ethereum ETF represents a significant milestone in the ongoing integration of digital assets into traditional financial markets, offering a new avenue for investors to participate in the cryptocurrency ecosystem. So as you can see, the funds are preparing to enter into ETFs on Ethereum. Are you interested in them? What percentage of your wallet do you want to invest in them? Leave us a comment. And at the end, a news which relates to the continuation of huge purchases of Bitcoin realized by MicroStrategy. MicroStrategy, the Nasdaq-listed business intelligence software giant founded by Michael Saylor, has made another massive BTC purchase worth nearly $800 million. This comes less than a week after the company said it will raise $500 million, later $700 million, to buy Bitcoin. Last week reported MicroStrategy's plans to raise $500 million through the sale of convertible senior notes due 2032. Just a few days later, the company raised its initial target by 40% to $700 million, indicating that it will use net proceeds to acquire additional Bitcoin and for general corporate purposes. Earlier today, the firm's founder and former CEO, Michael Saylor, took it to X to announce the completion of the BTC purchase. Aside from the $700 million it raised by going into debt, the company allocated excess cash to make the total acquisition of 11,931 Bitcoin for $786 million. This means that the average price of buying was just shy of $66,000. With this purchase, MicroStrategy's total BTC stash has skyrocketed to 226,331, worth over $8.3 billion. This means that the firm stands with an unrealized profit of more than $6.6 billion. MicroStrategy's shares have been on a wild ride since the start of the year, and it will be interesting to see how their prices will react to the latest Bitcoin acquisition news. This was the 14th episode of Kanga Crypto News. More coming soon. Remember to give us a sub and a thumbs up. Thanks to this, you will be up to date with what's new in the crypto world. See you in the next episode. Bye!
We are Kanga, beyond crypto.